Welcome to day 5 of the 30-day wholesaling challenge. My name is Rick Ginn, and today we are going to go all through how to write a wholesale contract, and we are going to do it together step by step. So if you've never written a wholesale contract, this is the video for you. But before I get into it, make sure you do me a favor. Make sure you smash that like button. You hit that subscribe notification button so you can be notified as soon as a video like this drops. So before I get started, I want to let you know in a link below this video, I'll have the template contracts that I'm going to go over step by step in detail for you. So at the end of the video, you can download it. You can go ahead and use our contracts. Today, we are going to focus on 2 types of primary contracts that you need to run your wholesaling business. Number 1 is called a PSA contract. That is just an acronym for purchase and sales agreement. You want to understand that. And the other one is your assignment of contract, which is the contract that allows you to sell your contract. Without further ado, let's get into it. You'll see my disclaimer on the top. This document is just for an example. I'm walking with you, and I want you to take these contracts and review them with your title company or a real estate attorney and make sure you are completely legit. Do not skip this step. It is brutally important. I'm not here to give you legal advice. I'm not giving you accounting advice. I'm just showing you how to fill out a contract. You got to make sure you follow your local state laws. Now, understand that most purchase and sales agreements, when you have to deal with a realtor, they can be as high as 25 pages. We're doing this in 2 pages because we're dealing with motivated sellers that want the deal done and they want clarity and they don't want games. So my first advice to you is, once you have negotiated a deal and you finish negotiating it, then you go through and you write your physical contract to match up your verbal agreement. This is not the point where you negotiate anything. You're just reaffirming. So what I like to do is go to my car, get the contract, and then I sit down just like I'm doing with you, and I write the agreement with my seller. It makes them very comfortable. It's only 2 pages. It won't take you a lot of time, and it reaffirms your commitment to buy the house and affirms your verbal agreement to your written agreement. So the first one is you pick the day that you're doing this. So we're in June 30th. So let's just say we're doing it on the 5th day of June. And this is 23. Really simple. Now, I'm trying to go kind of quick so I can do this in expedient form, but my handwriting gets sloppy the faster I go, so I'm going to slow down for you. So if the seller is Jane Doe, most of the time they're individuals. If I had another seller, you would put on there and John Doe, and so on and so on. If they had a trust, you just put the trust name on there. And if you need a cheat sheet, just go to your property appraiser site and look up the deed and see how it shows in public records. And that's the one you want to use. Make sure you have those signers in front of you. And then obviously the buyer, listen, you can buy it in your own name. It's not the end of the world as long as your contract's assignable. If you want to close it in an LLC right before the closing, you can do that. So if I'm putting this on there, it's home buyers. I'm just making up a company, LLC. That's it. That's the first section, really clear cut. So seller agrees to buy the following described real estate property together with all improvements and fixtures, and then you do the street. So 4865 Southwest Sand Hill Drive. And then if it's Port St. Lucie, whatever city you're in, 34952. Now the legal description. To get that legal description, you want to go to your property appraiser site and you can put it in there. It's kind of long format. I'm saving you time and like energy. Just copy it word for word. Some of the old houses, they can be as long as a paragraph. Or you can put it in the property tax number. And it's usually like a 9-digit code. Or you can do them both. You want to be very specific and make sure you get that legal terminology in so you have a legitimate contract. So here's really the bread and butter of a wholesaling contract. Number 1, it says the purchase price to be paid as follow. So what I always do is start with the total price. So if you're paying, say you're buying the property for $100,000, really simple. And then say you're leaving a $500 deposit. Now remember, your deposit amount is negotiable. Usually the more motivated seller, the more lenient they are on this. I used to do them $10. Honestly, I've done deals with zero deposit. I never make a deposit a sticking point. If I'm getting a great deal, I figure out the deposit stuff. So what I'm going to do is the total deposit is $500. And I try to line these up. I don't have the best handwriting. And so this is just a math problem. So the balance due would be $99,500. Now, guys, this is just the sale price. A lot of times the sellers have a mortgage attached to it. The title company will sort that out for you. It's up to you just to clarify the purchase price and that alone. So if we go through number one, it explains the earnest money deposit. That's basically money that is left at an escrow account, usually at the title company. And that money is supposed to be neutral as long as both parties adhere to the contract. That deposit is safe and secure. And you get what they call an EMD letter from your title company to prove you left a deposit for your seller. The next one is about prorations and security deposits. And you can read through this, but basically, if you don't specify who's paying for what, this basically says there's prorations in effect. So if I bought the house, since we're buying it in June, we're halfway through the year. So if it was a $2,000 tax bill, the seller will be responsible for the first $1,000, and you would get a credit for that. And then you would pay the tax bill when it rolls through November. So you actually get $1,000 credit. But if you have an agreement where you're paying all closing costs, I'll show you through this contract how to do that. But if you don't do it, it just says if there's any proration, security deposits, if there was a lease and you wanted to prorate it, say they were paying, I don't know, the tenant was paying $1,000 a month, and say you did it on the 5th day of the month, you divide 1,000 by 30, and that's how you come up with the proration on that. So the next one, which is super important, is number 3, which is the closing date. And this is the date of which you promised to close the property by. Now, hopefully you have the right title company working with you. You never want your title company to put you in a jam and push you up to the last closing date that's on the contract. So I want you to understand this right here. This is a critical part of our contracts. Shall close on or before. Let your title company know that you are going to dictate the closing date unless there is some sort of title issue, which if there is, you'll have to get an extension. But it's brutally imperative that you communicate to your title company, because a lot of title companies, if you don't communicate to them, they just assume if you say close it on the 30th, that they're going to close it on the 30th. I'm going to show you why you never want to do that in a wholesale contract. So if we got this on June 5th, I would say what we're going to do is try to close this. What I'll put on here is just July 15th. We have 4th of July. There's a lot of stuff going on. It doesn't mean I'm going to close on that date. It just means at worst case scenario, that's the date I'm going to close by. So it's so critical you understand this on or before to reassure your seller. I want to do it sooner and later, but I'm here to tell you, if you make the date, so if I put like June 30th, it's not a lot of time. It's basically 24 days when it comes down to it. And if you have to get an extension, you have to chase your seller around. So you're better off having a longer closing date and explaining to your seller, that's just worst case scenario. And I plan on closing before them. It gives you a lot more options to do it. And I'm going to show you how to control the deal in the second part of filling out the contracts of the assignment agreement. So honestly, longer is better because it gives you room to find a cash buyer. It gives you room and time to solve liens and payoffs and stuff like that. And sometimes if you have holidays like July 4th and stuff like that, sellers go on vacation. So build enough room into your deal and have the time. Closing will be held at, and then you put your title company. So ABC Title. And sellers agree to transfer marketable title free. So I want you to understand this, and clear of all encumbrances. That means you can't buy their property unless all debts are satisfied, the title's clear. Why is that important to you? Because there's very few cash buyers that are going to pay a decent rate and pay your assignment fee if they don't get clear title. Now, if there's a question with the title, always put it under contract. Let your title company sort it out. Your job is to find motivated sellers, not to do legal work on title. Put it under contract, give yourself enough time, and let your title company come back and report to you if there's any issues sooner than later. Number 4, it just says basically the seller is going to maintain the current condition of the property. You have the right to do a re-inspect before you buy it. Remember, your cash buyer is going to go back and do it. So sometimes sellers tend to take things out of the property. I've seen hurricane shutters taken out. I've seen AC systems taken out. They've got to understand they have to keep that stuff there and make sure you clearly identify if the appliances are staying. I'll show you where to write that in. A lot of times the appliances disappear and it upsets your cash buyer. So make sure you specify. Sometimes they do you a favor by taking those appliances out. Most of the time, I really don't care what they do with the appliances because I'm buying it so cheap. So now we're going to page 2. Now, I'm not a lawyer to read through everything, and I want you to understand. So I'm going to highlight some key things that you have to understand. Remember, I'm not a lawyer, but I've been doing this over 20 years. And by the way, lawyers will always give you your opinion. That's just what lawyers do. And I've successfully done thousands and thousands of deals with this contract. It works, and it's been tested in court. So I want to show you. Everybody asks me, okay, Rick, what's the worst case scenario if I don't close on this property? I don't want you ever to think about that, but you've got to know your worst case scenario. And it's right here. If buyer defaults under this contract, any monies deposited by the buyer shall be retained as fully liquidated damages. If seller defaults, buyer may pursue all remedies allowed by law, and seller agrees to be responsible for all costs incurred by buyer as a result of the seller's default. What's that say? I'm going to give you in layman's terms. If you don't fulfill your contract, you're at risk for your deposit. And honestly, you should be. If you keep canceling contracts, you shouldn't be wasting the seller's time. Now, knowing that, if I have a very good deal, I don't care what the deposit is. If I have a really bad, shaky deal, I'll do as low as $10 or $100. And that should give you some reinsurances going into it. Remember, you got to buy the property for the right price to make wholesaling work. This is not a key for you to go and throw everything under contract, because it doesn't mean you can't get sued on it. The idea of this contract, if you use this contract, it minimizes your damage. It also gives you the ability to pursue the seller if they back out on the deal. Basically, you can recoup legal costs, time expenses, and possibly damages. Don't take my word for it. Consult a real estate lawyer. I am not giving you legal advice. Number 6 basically says successors and assignees. This contract's binding, and basically they're heirs, administrators, trustees, executors, assigned to respective parties. Why is this important? Let me tell you why. I've been doing this a long time. I've had sellers die on me. As tragic as that sounds, our contract still survives the probate. And so it's critical you understand that. And if they try to circumvent it, you actually have a legal case. You have a valid contract. It passes through probate, and they still legally have to sell you the property. Number 7, access. Seller agrees that buyer may advertise the property and have access during reasonable hours to show the properties. Now, this gives you the legal authority to work with the seller to access the property. What it does not give you the legal authority to throw this property on the internet and try to act as a real estate broker or agent by putting pictures of the property on the internet. You can't do that. That is going to get you in trouble. This just acknowledges your permission with the seller. Sometimes they're going to want to limit this clause, and it's okay. You can strike it out there, but always ask for it, because you got to bring your contractors through, your cash buyers through. And without getting into the property, for them to buy your contract, they want to see the asset they're buying. That's why you have to get permission up front. And probably the most important of a wholesale contract clause that you must understand is number 8, assignable. This contract may be assignable by the buyer. That gives you the ability to sell your contract. This is the key ingredient to wholesaling. If you don't have an assignable contract, you can't do the techniques I'm about to show you. So it's critically important for you to use these contracts because it's in your favor. It clearly spells out what you're doing. And without it, you do not have the ability to wholesale these contracts. Now, number 9 comes in the inspection. So I'm going to simplify this for you. You want the longest inspection period that your seller can tolerate. Why? Because the reality is you want to check the property out too. And also you have to bring your cash buyers in. And the longer inspection period you have, the easier it is to sell your contract. If you have a crazy 3, 7, or 10-day inspection period, unless you have a lot of experience wholesaling, this is what gets most wholesalers in trouble. You can't put such a tight window on there and you don't have a cash buyers list, you don't have any connections, and you're brand new to the business. You want the longest inspection period as possible. Rick, how long? In a perfect world, that asks for 90 days. Not all sellers are going to give it to you, but here's what I recommend. 30 days. Why? Because you're going to need 2 weeks to find a cash buyer, and you're going to need probably a week or 2 to figure out what you're doing. 30 days goes by really fast. Imagine if you did 7 or 10 or 14 days. Unless you already have a buyer plugged in, you're most likely going to have to fail on this contract. So if you read through this, I won't waste all your time reading it. It just says you're responsible for notifications of inspections. You have to communicate to your seller when you're coming by. And remember, your job is really just to keep the seller out of the way, bring your buyer by there, verify the asset to the contract. And it's really that simple. The seller is not responsible for any fees if you hire an inspector or a home inspector or anything like that. And if you look down here on the bottom part, the most key part here is buyer may cancel. It says the condition of the property is not acceptable. Buyer may cancel this contract with a written notice of such an election to the seller prior to the expiration of the period. If buyer timely cancels this contract, the deposit is to be paid immediately and returned to the buyer, whereupon the buyer and the seller shall be released from obligation. As long as you cancel your contract within the time frame of the inspection, there's no fight. And this is why you want the longest inspection period as you can humanly get. Number two, you got to make sure you do it in written form. What I would do is I would probably send an email, and then I'd probably send a letter. And if not, I send a certified letter verifying the dates. That way you'll never get in trouble. And here's where a lot of new wholesalers get in trouble is if you have a 30-day inspection period. So say you went under contract June 1st and you had till June 30th or whatever, July 1st, please do not wait till the 29th or the 30th to figure out you're going to get out of that contract. It's too, like in my opinion, you've strung the seller out too much. So what I'd like you to do is if you have that longer inspection period, hopefully in 2 to 3 weeks, you can figure out if the deal is going to move forward. And that's why I want you to have as much room as possible. Trying to cancel it on the last day, it's questionable. And honestly, your intent looks suspicious. So once again, a longest inspection period you can, and do not wait till the last minute. It is the right thing to do, and it's the best way to do this wholesaling business. So number 10 is you see these wide open, these blanks right here. This is where you put in additional terms. So if you decide, say you're getting just a smoking deal, and I love this part, and they go, listen, I will do it as long as you pay all the closing costs. Let me show you how to do that. Buyer agrees to pay closing costs, and then you go into a little bit more detail. Settlement fee, the 2023 tax bill, the doc stamps, as much detail as you can put it in here because it keeps you out of trouble. What else can we put on there? There's going to be no realtor's fees. There shouldn't be anything like that. And the last month water bill. Guys, if you're making a huge profit and paying a water bill for your seller makes them happy, then do it. Now, say you want to include, say you are buying, say someone's including they want to include all the furniture in the property. By the way, you don't want the furniture. The furniture does not help you in wholesaling. But if you were going to include furniture, seller is including furniture. Sometimes it's a car, Mustang, car in garage. You understand what I'm saying here. This is where you guys do it. So when you say, I'm going to pay all closing costs, you have to be careful because it's a very misleading statement. So a lot of times we do what we call net deals with sellers. The seller wants to net $100,000. The problem is you don't know what the liens are. You cannot be responsible for the seller's liens. So if you're going to go, hey, listen, I'm going to pay all your property tax, make sure you specify the year, because I've seen tax bills go back 7-9 years. It's devastating. If you agreed in writing, you're kind of stuck with it. So be very specific. What I advise you to do is figure out what your verbal agreement, talk to your title company, if not a real estate lawyer, and see how you can put it in the contract. The additional terms is the section you're going to do that. Now, when we come down to the bottom, we're going to put the date. So we're on June 5th, 2023, and you're going to have one side for the seller and one side for the buyer. So your seller is going to sign right here, And then basically you are the buyer. Now, if you're buying it in your name, it's not the end of the world. Don't freak out. But if you're buying it in a corporation name, you have to sign as president or manager or managing member of your company. So here's what you do. If we were home buyers, so say that's my signature, and then below it, I'm going to put on behalf of Home Buyers LLC, and I'm going to put my title president. Why do I do this? Because I'm assuring I'm not signing it for it personally. If you sign your name personally and you don't put the disclaimer below it, you can technically be on the hook as a personal transaction, meaning if anything were to go wrong with it, they'll go, I'm going to come after Richard Ginn because Richard Ginn signed it. No. Richard Ginn signed on behalf of Home Buyers LLC as president. Once you have that on there, there's no way they can confuse the two. Remember, when you have a corporation, an LLC, whatever it is, whatever type it is, you basically act on behalf of that corporation. So you have to clearly, distinctly separate this in all your contracts. If you just sign your name without a title below it, you can risk being held personally liable for it. So this is it. So what we're going to do now is bounce over, and I'm going to show you how to fill out an assignment of contract. So now you have a contract for $100,000. Great. You got a great deal. Now you have a buyer that wants to buy your contract. Let me show you how to fill out the assignment of contract. So once again, there's a disclaimer on the top. Please make sure you run this by your title company and a local real estate attorney in your state, and make sure you comply to all local and state laws when filling out this contract. So this contract gives us the ability as a wholesaler now to sell our contract. This is what prevents us from being licensed real estate agents, because they sell the properties, we sell the contract. So you're going to have an assigner and an assignee. You are the assigner. So if you're doing it in your personal name, you would put it there. If you're doing it in an LLC, that's where you'd put it. And then your new buyer, which is, let's just call him XYZ, XYZ buyer. It's probably an LLC. And that's where you go. So the next part is assigner has entered an agreement to purchase real estate with, and then this is where you're going to put the seller's name. Whatever's on your original contract. So make sure you have your original contract sitting next to your assignment of contract so you fill out correctly. The contract is attached here to Exhibit A. Under the contract, the assigner has the rights in the property commonly known as. Now, understand, you have to show your new cash buyer your contract. You cannot hide the contract because in reality, the contract is what you're selling. So make sure you have it. You want to make sure you have a buyer that has clear intentions on buying this property and taking over your contract. If they don't have the intent, don't show them your contract. I only show them the contract when I get down to the final part of signing it, and I let them review it. And the really cool part is I have them review it at my title company, so the contract always stays in control. I do not send them via email. If you're doing this virtually, you have to, but if you're doing it local in your market, use your title company to show them the contract so you always stay in control. So the legal description, you're going to get that from the deed on your previous contract, or you can go over to your property appraiser site, or you can go to the clerk of court. Take your time, fill it out right, get it done. And then what you can do is, I always put in on the legal address, I put in the full address, and then you can adapt this contract, and below it, I put in the legal description. And you can put in the tax ID as well. The more descriptive you are, the safer you are on a written contract. It says assigner wants to assign the rights that he acquired under the contract to the assignee. All this means in simple layman's terms is they're basically replacing you in the contract you wrote with your seller, and they're going to take over the contract. And I'm going to show you how to leverage this to your advantage so you don't get manipulated by a cash buyer. So let's go through the terms and conditions. It says parties agree to the following. Assigner assigns all rights he acquired under the contract. Check. Number 2, assigner accepts all terms and conditions of the contract. This is where they have to review the contract, because any smart cash buyer has to see the terms and the conditions of your original contract. Mostly what they're looking for is not the price, because they've already kind of figured out the price. I'm going to explain that in detail, but they want to see when they have to close on and when they have to get the deal done. That's what they're mostly focused on. But you have to stay in control. I'm going to show you why later. So the assigner is willing to able to close the underlying transaction. Number 3, Assigner will deliver to the assigners a cashier's check, money order, or wire transfer, and the deposit in the amount of blank dollars as the initial deposit on the contract. My recommendation is make sure it is a sizable amount. They are a cash buyer. If I don't get tripped on deposits, they shouldn't get tripped up on deposits. And it's got to well exceed whatever you put down as a deposit, or maybe you're using their deposit to fund your deal on your wholesale contract. But my advice is the bare minimum is $2,500. I like to make it $5,000. Why? Because I know they'll pay attention. So here's where you put the $5,000. I also let them know it's a non-refundable $5,000 deposit. The reason you do that is because you can snuff their intent out right there. If they're a wholesaler trying to daisy chain your deal, they will never leave you this deposit. And you will figure it out quick because the story will get long and dramatic. If they can't put up $5,000, there's no way they can pay cash for this property. Move on to the next buyer. So number 4 is where a lot of wholesalers get tripped up. And now you're coming down to your assignment fee. So if you bought the property for $100,000 and you're selling it to them for $110,000, that's how you represent it to your cash buyer. So Mr. Buyer, you want to take this contract over, it's $110,000. At this point, it shouldn't matter what the assignment fee is, although a lot of cash buyers get tripped on what you paid for it. Remember, they're going to see your contract anyways. Tell them to get over it or go find another cash buyer. So we're going to charge $10,000 assignment fee. And this is where you put in that amount. And then under number 5, it reconfirms how much you're taking out of this transaction. For full disclosure, it's $10,000. It's black and white. If your cash buyer has a problem with this part, go get another cash buyer. When I buy deals from other wholesalers, I could care less. I hope they're making a ton of money on the assignment fee and they bought it really cheap. But trying to hide this is pointless. So don't try to hide it. The more you put it out there, the smoother your transaction is going to go. So now we're coming down to fill out number 6, which are the total numbers. And this can get a little bit confusing, so let me go through it. So it says number 6, the assignment fee will be added to the purchase price identified in the contract, which you have attached. The total amounts owed by the assignments are as follows. The underlying purchase price of your contract is basically what you, the wholesaler, contracted with your motivated seller to buy the property. So remember that was $100,000. You can do zeros or not, it doesn't really matter. Now, what did we say our assignment fee is? We said it was $10,000. So I try to keep the numbers lined up. Now, what did we ask for a deposit? I asked for I got $5,000. I didn't ask. I just, that's what you asked. Stop trying to negotiate the deposit, because if they're a cash buyer, who cares? Like, if you can't fund $5,000, you're most likely going to struggle to fund this property in a couple of weeks. So basically, if you add it up, and I'm going to do a little column on this side, 100,000 plus the 10,000 gives you $110,000 total. This is just a math problem. So if we minus off their $5,000 deposit, that means they owe $105,000 at the closing. And this is where you go and put it in here. It's $105,000. Be very clear on this. You cannot play games with these numbers. It's black and white. Buying the property for $100,000, I'm charging you a $10,000 assignment fee. You're leaving me $5,000. So when you go to fulfill my contract, you will owe $105,000 plus closing cost. That's it. Guys, do not negotiate this stuff because you've already done the hard work with the seller. This is where you harvest your profit, and you want to be very strict about it. So remember, we talked about the closing date. So I believe we went back and put July 15th as a closing date. A lot of times, without specifying in a contract, if you don't specify when your new cash buyer has to close, then they take over the terms of your contract. So remember, we put in there July 15th. No. I'm going to tell them they have to close on or before June 30th. Well, Rick, what are you doing that for? We have till July 15th. What if they don't fulfill their end of the bargain? What are you going to do? You're going to lose the deal. So I like to leave at least 10 days. Worst case scenario is 7 days. But remember, the closer you make these closing dates, the more stress it is on you. If they don't show up, they lose their $5,000 automatically. It's a non-refundable deposit. You have to let them know when they have to close it by, because a lot of them look at your original contract. Oh, I got till July 15th. No, very clearly, the terms and conditions are on this. You have to close this contract by June 30th. By using my assignment contract, the ones me and Zach use here, this covers you completely on it. You have to clarify this right here. It's so important. It is a critical part of the assignment of contract. Do not give them your closing date, because what if they disappear? What if they get in an accident? What if they run out of money? I got to take their $5,000 and go find a cash buyer really quick, give that buyer the discount, or use some money to renegotiate with my seller. That's why you want a gap between your contract closing date and your assignment contract closing date. Be very clear on this. Now, going to the second page, I'm going to highlight some keys here. And this is stuff that I figured out over 20 years of wholesaling. And if you understand this, you'll protect yourself. So in number 9, if the assigner attempts to communicate with the seller, it will terminate this agreement. If your seller wants to get cute and go behind your back, it's going to cost them a fortune. Make sure you remind it, and they will follow the rules because they don't want to lose their $5,000. How we protect the cash buyer is this deal only goes through if we deliver clear title. Now, you can technically get an assignment agreement before the closing, but if you're starting out, just follow this process because it's the cleanest and it will probably yield you the most money. And then once again, I go back in 11 again. I said the assignee will not contact the seller identified in this contract, and they agree to only communicate through you, which is the assigner. Meaning if they have a question, they have to go through you or the title company. They cannot contact the seller. That is immediate grounds for terminating this agreement. So number 12, which is one of my favorite ones, and it says basically the assigner at time to time may renegotiate underlying purchase price with the original seller. Okay, Rick, what does that mean? Well, it means the assigner, which is you, is entitled to the difference between the contract purchase price and this assignment. The difference, if any, will be paid as an additional assignment fee at closing. The assigner's negotiation of the purchase price will not affect the total due at closing. Meaning, say there's a $30,000 lien and you and your title company were able to knock it down to $10,000, you created another $20,000. You, the assigner, gets the profits. I learned this the hard way. I negotiated a big lien once and I had an attorney hold me to the agreement, and my cash buyer got the difference. It was like $30,000. And this is why me and my attorney sat down and wrote clause number 12. Make sure you understand this. This is why I want you using my assignments of contracts to protect you against dirty cash buyers. If you do the work and you get a discount, it doesn't cost your cash buyer any more money, then you deserve the reward for helping out. And if you want to give some money back to your seller, then give it back to them. I'm not going to give it back to my cash buyer. They already agreed to the price. And then number 13 is just a disclosure of property sold as is. Basically, they have to do their own due diligence. And once they close, the property is theirs. You make no representation. We don't do disclosures. Obviously, there's something major wrong with the property. You got to tell them. But for the most part, we don't live in the property. We don't act as realtors. They're buying your contract. So when you come down doing the signing, once again, you are basically going to put in. So we did this, say we're doing this June 15th, 2023. You're going to be the assigner, which is us. And then it's on behalf of Homebuyers LLC and president. Why do I do this? Because I want to make sure I'm not signing it for her personally if I'm using my LLC. And then basically the assignee is going to sign right here. I even put down a time frame, 3:10 p.m. So there's no question. They sign there, and then however they do the representation, they would put it there. So guys, honestly, this is it. These are the two contracts I've walked you through. The purchase and sales agreement, the 2-page specifically for wholesaling. And then the second contract allows you to sell that original contract called the assignment of contract. And once again, that's 2 pages. And if you go back through this video, you've never done one before, just go step by step, line by line. It's really, really simple. Guys, this is day 5 of the 30-day wholesaling challenge, specifically on contracts. Listen, if you got value from this video, do me a favor, make sure you smash that like button. You hit that subscribe notification button. And this is Rick in, and we'll see you in day 6.